This is Ralph Sass, and this is the lecture for Managerial Accounting, Chapter 10. The second part, once again, it'll probably be one 15 to 20 minutes video. And this is the slide I left off with in the last video, so I'm going to go ahead and move on to the next slide. Just kind of reviewing, recall that we had 1,000 zippies and each one used 1.5 pounds. That's how we calculated that 1,500. So let's look at a labor variance now. And once you get one of these variances, folks, they all kind of fall out the same way. So now we're going to look at a labor variance. It should have taken 1.2 standard hours per parka, sew them or whatever. Each standard hour was valued at $10 an hour. They actually worked 2,500 hours. Total labor cost was $26,250 to make 2,000 parkas. Notice, and this is my, once again, this is my preferred way, and I believe that from now on through most of these slides I'm going to have it set up this way. Notice the far left, the 26,250. The thing I like about the 26,250 is when they tell you that it's 26,250, really all you have to do is copy that number over there on the far left. You don't need to do the division to calculate that 1050, although you can, but it's really unnecessary. How did they go about calculating the actual, or pardon me, the standard hours? They took 1.2 hours times the 2,000 parkas, and it should have taken them 2,400 hours, and then they multiplied it by the $10 per hour. There they took the 26,250 and divided it by the 2,500 hours that they actually worked to get the 1050 per hour. And then notice, and whoops, notice I want to get rid of those. Notice in the middle there they took the $2,500 and the $10 an hour for the 25,000. And so notice in this case, both variances are unfavorable, both the efficiency variance and the rate variance. And just a quick note on interpretation, the far right, standard hours, standard rate, 24,000. That's how much I should have spent. I spent 25,000 hours because they worked an extra 100 hours. So my efficiency variance is $1,000 unfavorable. They worked more than they should have. And then notice in this case, not only did they work more hours, but I had to pay them more, perhaps overtime, because they did something wrong, or perhaps they were goofing around or whatever. And so notice I should have spent 25,000 for the actual hours worked, okay? But I actually spent 26,250, so the rate variance in that case is unfavorable by 1,250. So notice in the last example, one of the variances, like a rate variance can be positive, and efficiency variance can be unfavorable. They can both be unfavorable. They can both be favorable. It really just depends upon the particular business and the number of hours worked, what have you. This is once again calculating it using the equations, 2,500 hours at 50 cents an hour. Notice that's a positive number, and it's positive, so it's unfavorable, which once again, hate to say it, doesn't make sense to me. And then notice on the labor efficiency variance, they spent $10 an hour on an extra 100 hours. Once again, that's a positive number and it's unfavorable. So whatever way makes sense for you, please feel free to do that. Responsibility for labor variances is usually the production manager, but notice a lot of things can fall into this. How skilled the workers are, how much training they've had, perhaps their supervision, their manager, maybe they don't want to work for that particular individual. The motivation, their morale can play a role. So there's a lot of possible things that can play a role in those labor variances. And once again, will there be arguments between the production folks and the purchasing folks? And there could very well be. So let's notice what we have here. We've got 1.5 zippy hours, $12 per direct labor hour. They worked 1,550 hours to make 1,000 zippies. A couple of things to note here, just offhand. That 18,910 is my far left number. Okay, that's how much they actually paid. Notice they should have used 1.5 standard hours to make per zippy 1,000 zippies. So they should have used 1,500 hours. They actually used 1,550. So right away we can see they used more labor hours than they should have. Okay. Once again, labor rate variance for the week was, in this case, it was $310 unfavorable. They worked 1,550 hours, took 1,220 minus $12. Obviously, that's a positive number, so it's unfavorable. Notice they didn't tell us here the $12.20. How would have I gotten that $12.20? I would have taken the 18,910, the actual amount of hours worked, divided by 1,550 hours, the actual amount of labor hours they used, and that would have given me the actual rate there of $12.20. The efficiency variance, obviously they already used more. We know that they used more hours than they should have, so we know right away it's unfavorable. Only question is how much. Notice they used 50 additional hours. There's the 1,550 and the 1,500. We already saw that. And so that is $600 unfavorable by taking the 50 times the 12. And once again, here it is in my preferred format. Notice once again, how'd they get that $12.20 on the far left? They took the 18,910 and divided it by the 1,550. Moving on to variable manufacturing overhead. Okay. Once you've done this once, whether it's direct materials, direct labor, or manufacturing overhead, price and quantity variances can all be figured out. And so let's see what we've got here. We've got 1.2 standard hours at $4 an hour. They actually worked 2,500 hours to make 2,000 parkas. Okay, so what I'm going to have to do is take the 2,000 times 1.2, and I believe that's 2,400 standard hours. So they actually worked 2,500. So that's a little negative there as far as the hours worked. Can't do the math. Take the 10.5 divided by 25. And might be a little positive there on the, nope, the 420. The 10.5 divided by 2,500 hours is $4.20 per hour. And notice the beauty of this. The standard hour, standard rate on the far right there, $9,600. They actually spent to produce that, to use that many, the actual amount of hours they used there in the center column is 10,000. So the difference is $400 unfavorable. Okay, and they've got it there marked as an efficiency variance. Think of efficiency as quantity, so I mean it's a quantity variance. And then notice on the right, to work 2,500 hours, they should have spent 10 grand. They actually spent 10.5, so I have an unfavorable rate variance of $500. And notice the total variance, the total between the far left and the far right, is $900. So my total variance is $900. And I've taken that total variance and broken it up into a rate and an efficiency variance. And once again, that's how they went ahead and calculated those numbers. And here it is using the formulas once again. And if you want to do that, that's perfectly acceptable. So notice what we have here, just another quick check. It uses 1.5 standard hours at $3 per direct labor hour. They produced 1,000 zippies, so they should have used only 1,500 hours. So we know they used more hours than they should have. 5,115 was spent. I'd have to take that 5,115 divided by the 1,550 to find out the rate per hour. And let's go ahead and do it this way. So there's the 1,550 hours. Must have been 330, and so it's 465 unfavorable. And it's $150 unfavorable. They we already saw that they spent 50 hours more at $3 per hour, so that's $150 unfavorable. And once again, there it is in my preferred format. Now there is one important note that we need to make here. Material variances, and I can't stress this to you enough. There may be a homework problem this way. I've been known to do this, at least once on a quiz, perhaps, or on an exam, or perhaps a Connect problem. The quantity variance is computed on the quantity that's used. The price variance is computed on the amount purchased. So there are some situations where you have to calculate the middle column twice. If you're working a just-in-time inventory where you're using everything you purchased, those two numbers will be exactly the same. But where you buy some and you put them in inventory, or you take some out of inventory that were already in inventory, you're going to have to use and calculate two different columns in the center. So notice what we have here. Last month, 210 kilograms were purchased, but 2,000 kilograms they only used 2,000 kilograms. So what that means is that extra 10 went into inventory. So we're gonna measure the price variance based upon the 210, but we're gonna use calculate the quantity variance not based upon the 210 but on the 200. So notice what they did here, and they broke that center column up into two pieces. And I'm gonna start on the left. Actual quantity purchased, actual price is that 1,029, and then notice they put the actual quantity purchased times the standard price, and they have a $21 favorable price variance. But then notice what they did to measure the quantity variance. They took the actual quantity used and multiplied it by the standard price. And then they compared that to the standard quantity, standard price all the way over there on the far right. And so there was zero quantity variance. When you purchase and use different amounts, that middle column, one will have the quantity purchased, the other will have the actual quantity used. So, and you measure the quantity variance based upon the amount used and the price variance based upon the amount purchased. And I will guarantee you will at least see a homework problem or something on that. So when you purchase and use different amounts, you kind of have to calculate two columns in the middle. In the event you use and purchase the exact same amount, you don't have to worry about that little subtlety. The advantages of using these standard costs, okay, is it allows you to focus on what we call management by exception. It allows you to look at what's going on and focus your attention on things that aren't going well. What you're going to focus on is variances and price variances or quantity variances, and then try to flush out why there was a variance. Was it your budgeting process? Are your standards wrong? Or is somebody on the production floor or in the purchasing department doing something that they can improve? I don't want to say it's necessarily wrong, but a spot where you can improve so you can perform better. Okay. They also, and I'm going to the top right here, they provide benchmarks. Every company should know how much they should use, and it's important to have those benchmarks. Some problems. And the big problem is, okay, the one on the right. If variances are misused as a club to negatively reinforce employees' morale may suffer and employees may make dysfunctional decisions. You don't want to use these, this provides us a ton of very valuable information. We want to use this to make our operation better. We don't want to use this as a club to beat over somebody's head, okay, to say, oh, how bad you are, how poor of a manager you are, you're using way more than you should, or you're purchasing way more than you should, okay? And so the thing we want to do is use this information to improve our performance, not to use it to criticize employees, what have you. And I hate to say it, but in today's day and age, too often it's used to criticize employees rather than look for ways to improve. Okay. Keep in mind, and I'm going to point to the right here just to make it quick. In some cases, favorable variance can be as bad or worse than an unfavorable variance. You may be favorable, you may have a favorable variance, but the reason for that variance may be because you're skimping on maintenance or some other important item that'll come back and hurt you in the future. And so you want to make sure that when you're looking at these variances, yes, positive numbers can be good, negative numbers can be bad, but you're also looking for why it's occurring And even a huge positive variance. Oh, you spent a lot less than you did than we would have expected. That sounds good until you realize that what we did, the reason why we saved so much money, we spent so little, is because we didn't train you. And next month you're going to, you know, um, be performing poorly because you don't have adequate training, support, whatever it might be, um, to do whatever it needs to be done. That concludes the lecture for this part of the chapter, and I will post the homework and what have you where needed. Thank you.